from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Ed Ludlow in New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, artificial intelligence, a humanoid robot, and a recruitment drive to power Tesla's work on full self-driving. The EV maker hosts its second AI Day. We'll discuss what to expect. Plus, Bloomberg learns that super agent Ari Emanuel is pushing a settlement between Twitter and Elon Musk. The social media company's shares jump as Musk's texts to key players are revealed. And Katie Hahn left Andreessen Horowitz to start her own firm, Hahn Ventures. I'll sit down with her on how she plans to put the $1.5 billion of capital she raised to work. We'll get to all that in a moment, but first let's get to the markets. And wow, what an end to a week, what an end to a month, and what an end to a quarter. Brutal for the NASDAQ 100. Bloomberg's Bailey Lipschultz here with the latest. Blimey.
Yeah, Ed, pretty much everything under the sea, or everything trading sharply in the red today. It's really just been a brutal September. When I have multiple emails from analysts and strategists saying good riddance September, that really is a signal of all you need to know. For the NASDAQ 100 in particular, a third quarter trading in the red. That's its longest quarterly losing streak since 2002. Obviously, this pain has really been across the board. You're looking at stocks trading lower, the likes of Apple, Microsoft providing the largest drag. Really just bad when the market is so heavily skewed to these tech giants.
I think I took a bit of a pause during Friday to think when things were slightly different. We had the Fed on September 21st. And then when I look at the NASDAQ 100, I think I'm right in saying mid-August, we were up 19.3% for the quarter or something like that, and things have changed so quickly. What is top of mind right now for investors, particularly when we look across technology and the equity markets?
It's a lot of uncertainty, obviously, around the Federal Reserve, the intent to continue raising interest rates, keeping those interest rates higher for longer. But Ed, when you really look at the latest leg lower, and you look at Apple, Amazon, and Microsoft, there are a lot of jitters around earnings season. Earnings is right on the horizon. You looked at that report from Nike that really blew out the bottom for that stock and weighed on both the NASDAQ 100 and the Dow Industrial Average. So concerns are really getting to the point where price to earnings are going to be something that falls under the microscope.
Right, and earnings expectations have already come down. We wait for the third quarter earnings and see how much earnings expectations fall further. Thank you to Bloomberg's Bailey Lipschultz. Right. On Friday night, Elon Musk will hold Tesla's second ever AI Day. We expect updates on full self-driving, the company's in-house supercomputer, and of course Optimus, a humanoid Tesla bot. You may remember the Mr. Roboto-style dancer that joined Musk on stage last year. This time, he's expected to unveil a true prototype. Sorry, it's hard to keep a straight face with that on the screen. To get what we expect in the latest, we're joined by Bloomberg's Sean O'Kane over in Austin. So, Sean, what do we expect?
That's about what it looks like when I try to dance, too. Yeah, I think the biggest thing that we're waiting for is what kinds of demos Musk has promised to show off a couple different actual working demos tonight. And so I think that's going to be the thing that people take away the most. More specifically, I think a lot of people in the community who are working on robotics and have studied it for a long time, I think they all expect to see Tesla try to prove that it can differentiate somehow from some of the other companies like Boston Dynamics that are already working on this kind of stuff. And one thing we are probably going to get based on what Tesla has been tweeting and Elon Musk has been tweeting is some sort of demonstration of manual dexterity and being able to show that the robot can really do fine motor skills, by doing some sort of demo, whether that's, cracking open a beer or something like that. I don't know. I'm sure it will be something weird. Maybe throwing a giant metal ball at a Cybertruck.
Bring us up to speed on where Tesla's at with its work around artificial intelligence, right? We're really focused on Optimus, but actually the focus to this point has really been about full self-driving.
Yeah, I mean, they have spent a lot of time. They have a lot of engineers who've been working on the sort of underlying, the fundamental research and development and engineering that goes into trying to make their cars be able to drive themselves. And they're not there yet, but they've done a ton of work going down that path, more than any other automaker. And, the thinking is, and the pitch from Elon Musk is like, hey, we're doing all this work. there's a way that we could leverage that into other, lines of business. And so whether or not that's taking the supercomputer that they've developed and making space for other companies to use it in some capacity, because maybe in some ways it exceeds what other sort of chip makers are out there doing, or taking the virtual worlds that they're building to train those AI models to power the full self-driving system, and finding a way to use what they're doing there. And so, I think that's probably one thing we maybe get a little more clarity on tonight. Musk is always very proud of the supercomputing team, and some of these things are happening, far more in the background compared to sort of the electric vehicle deliveries and sales. So I hope we hear more about some of that tonight, but he's promised it's going to be very technical. Tesla treats all these events as a recruiting event. So, if you're watching as a layperson, it might be hard to follow, but I'm sure there will be some sort of dancing robot to keep you entertained.
Hey, Sean, real quick, give us some color. What do these events tend to be like? How do they tend to play out?
I mean, they're overwhelming when you're there. Even the vehicle reveals are always a little bit, like rock concerts. I mean, there's always a big stage. There's always a lot of loud music. And I was at the opening of the Austin factory earlier this year, and it was, Tesla took that to its most extreme, and like actually hosting concerts during the event before and after Elon Musk spoke. So I don't think we're going to get quite as much of that element tonight. It's going to be a lot nerdier, but you never know with Elon Musk. It can always go in a really wild direction. And so I think the thing I'm most interested to see is how far has the development of this robot come? Right. Does it look like someone dancing in a suit, or will it actually look like a robot?
All right, Bloomberg's Sean O'Kane, thank you very much. I want to get some more analysis and bring in Pierre Ferragu of New Street Research, who currently has a buy rating on Tesla stock. And I'm delighted to have you here in New York with me, because you cover Tesla, but from the tech perspective, you also cover NVIDIA, a chip maker that's done a lot of work around artificial intelligence. And we'll bring those themes in. What is your interest in the work that Tesla's doing around AI? What do you see as the opportunity there?
So let's talk about like the chip space. What's very interesting is that Tesla today, they have this giant neural network that is driving the car for you, more or less.
Right.
And this thing still has to train, to learn. And the learning cycle today on giant clusters of NVIDIA GPUs takes, let's say, 5 days. And the objective of Dojo, the supercomputer Tesla has developed in-house, is to be able to do that over one night.
Right.
And that's basically, instead of having people working and waiting a week, it's people working, going to bed, and the next morning working again. So it's a game changer in terms of the pace at which you can improve the system. That's all the vision of Elon, and that's what the investment has been made there.
It's interesting, you went straight to the hardware component of this. A lot of Tesla fans and investors and owners that I've spoken to, they want to know about the latest beta version of full self-driving updates. They want to know when there'll be a wide public release.
Yes.
What do you expect on that front?
Yeah, it's a very good question. So Tesla has already made a lot of progress on their system. I personally drive the latest version of FSD every day. I like it a lot. My assessment is that on the perception front, Tesla has made achievements nobody else has done.
And you mean its ability to read the world around it?
The car can figure out what's around it, like the traffic lights, other cars, obstacles, pedestrians, bikers. I can't remember a single time my car would not perceive something around it. And I think it has been the focus of Tesla in the last few years. And they've really, that's what Elon calls like real-world AI, interacting with the real world. And they've achieved a lot. And what's very interesting is that now that the car can perceive the world around it, the next challenge to me is what we call representation, which is making sense of what you perceive, what you see, and figuring out, okay, that's a stop, I need to wait for this car, and then sneak between these two cars and things like that. And that's where I feel FSD, but as a user, I feel there is still a lot of work. It's already very impressive, but there is still a lot of work to do for really the car to step to level 3, where I can stop supervising it. And what I would expect today is actually Tesla to show these challenges and to show how difficult it is and what they're doing to address the challenges, because that's the way you're going to hire the best people in the world.
On that point, what they're doing to address it, Elon Musk bills this as a recruitment event. I did a Twitter poll, and I asked Tesla owners, fans, investors, what are they interested in? And of course, you see on your screen, They're interested in Optimus, the humanoid robot. I mean, how interested are you in the robot itself? You know, what do you see? Do you see that as a product, or as just an in-house tool, or a gimmick? What's your read?
I'm going to be interested exactly in the same thing. I want the Tesla team to tell me how far have they gone, and I don't expect them to have gone that far. It's quite a challenging project, but I want them to articulate what the challenges are, because that's the best way they're going to be able to hire the best people. Like, you can work with Elon Musk, you can have exposure to the Tesla stock options, and you're going to work on the most interesting challenges. That's really, I think, what they're going to try to have. So it might be a bit disappointing for like analysts and investors, because you're not going to see the product getting into the market anytime soon. You're going to have like very technical discussions about how do you achieve, you know, like dexterity, how do you achieve perception for a robot, or like, as I said, representation and things like that.
You've said in your previous research that Tesla is a matter of years ahead of others when it comes to artificial intelligence. And I said earlier, you also cover NVIDIA. And NVIDIA, not just on the semiconductor side, but broadly, has done a lot of work in AI. Can you compare and contrast those two?
Yeah.
You know, where does Tesla stand in your estimation? And what has it achieved to date in the field of artificial intelligence?
Mm-hmm. So in the field of like real world artificial intelligence, I don't think anybody stands close to Tesla. Tesla is way ahead of everybody in terms of developing systems. But remember, NVIDIA is a platform player. They develop a chip and like an ecosystem for people to develop their own system. So they are not really in the same game. And what's happening today is that Tesla, being so ahead of the curve, the same way Google is ahead of the curve, these two players, what have they done? They've developed their own chips. And like the TPU at Google and Dojo for training at Tesla. And they've done that for this reason, that they need to accelerate the pace at which they develop their systems. So of course, like common wisdom is that's not good for NVIDIA, because like the dream of Tesla is actually to turn off their NVIDIA cluster and replace it by Dojo. But I have a different take. I think it's very encouraging, it's very positive. Because at the end of the day, what Tesla wants is to be able to do overnight what takes them several days today. So they need more and more and more processing power. And as you can imagine, very few people will be able to develop their own systems the way Tesla and Google do it. And that's the market for NVIDIA. So I actually see Google developing the TPU, Tesla developing Dojo as very positive leading indicator of where the market of NVIDIA is going. Everybody needs more processing power to develop these models.
Pierre, I wish we had more time, but very quickly, we might get third quarter deliveries this weekend. What are you expecting on that front?
So I sense Tesla has produced a lot of cars, 380,000.
Wow, that's high.
That's very high. I also suspect they've been struggling a bit to deliver all these cars. So I think deliveries are more like at 360. And I think you have about 20,000 cars that might be on boats between China and the rest of the world.
All right. Pierre Ferragu, New Street Research, thank you very much. Coming up, a read into Elon Musk's text before heading to Delaware, where he'll face off with Twitter. How one text suggests Musk already knew of the social platform's bot problem. We'll discuss that next. This is Bloomberg. Hollywood super agent Ari Emanuel is trying to pave the way for a potential settlement between Elon Musk and Twitter. That's according to sources. The news coming one day after Musk's text between Twitter executives, close friends, and potential investors came to light. Bloomberg's Max Chafkin joins us to discuss. Just when you think that this saga cannot get any weirder,
we have a Hollywood super agent. I'm not sure how seriously we should take this. I think one of the things we learned in these texts that dropped is that there are a lot of people out there trying to use their friendship with Elon Musk and sort of wheedle their way into this deal. Ari Emanuel, of course, very, very well-known, very famous deal maker. This is potentially a huge deal. I don't think it's hugely surprising that he might try to put himself in the middle of this. I don't think that's a reason to think it's going to go anywhere.
So let's get onto those texts. These are texts that emerge from court filings relating to the upcoming trial, which starts October 17th. They go all the way back to April, which predates Musk's offer. I think we have a series of texts starting with the current Twitter CEO, Parag Agrawal. And basically what they seem to demonstrate is how that relationship deteriorated quite quickly. And then Elon Musk basically said, all right, I'm going to put a deal in to take Twitter private.
Yeah, I mean, one thing you learn when you read these texts is that, wow, like Elon Musk is talking to a lot of people. He's having direct relationships with many, many people in sort of all different domains, politics, all these billionaires, and he's, just texting away with Twitter CEO and its board, and is kind of working things out as he goes. And as you said, with the text with Twitter CEO, you see, what seems like pretty diligent efforts to work with him, and then the deterioration of the relationship happened, almost immediately. We saw this play out, by the way, on Twitter as well, when Elon Musk famously, tweeted a poop emoji at the CEO of Twitter. But it's pretty interesting to see this, kind of in black and white.
The other thing we learned is some of the background, I suppose, of how Elon Musk went out to raise capital, outside equity financing for this deal. And in exchange with Larry Ellison, he basically says, you want to get involved? He says, sure, how much? Elon Musk says, oh, $2 billion.
Yeah, you'd think they were, talking about buying a cup of coffee or something. Larry Ellison says, $1 billion, ish. I think what this shows, first of all, number one, this is a hot deal. I mean, and we can debate whether there are fundamentals to back that up or whether it's just Elon Musk. But you look down the list and you see Ellison, Mark Andreessen, a bunch of lesser investors, all of them basically willing to get in on this without many questions asked, which I think, that tells you something about how things turned out. It also tells you just the gravity around Elon Musk. He is clearly at the top of the Silicon Valley totem pole. You have Mark Andreessen, very influential venture capitalist, basically putting up $250 million, no questions asked. And seen this over and over again, including Larry Ellison, another rich and powerful guy.
So when the news broke that Ari Emanuel was, according to sources, brokering some kind of settlement, the shares rose at one point to their highest level since May. I think we have a chart which shows the spread. I look at it from time to time. It's kind of a soft indication of where Wall Street sees this deal's likelihood. Where do all these texts leave us ahead of the trial is my question.
Well, I think one of the things, people have observed this already about Elon Musk, but he has some things in common with the former president. And one of those things is he tends to tweet what he's actually feeling. I mean, and so if you look at these texts, they are very interesting. They give you a sense of what is it like to live as Elon Musk. You have a lot of people, hangers-on, rich guys, bothering you all the time. But it doesn't actually change the narrative all that much. Elon Musk has said many of the things that we learned in these texts, he's already said publicly, including this thing about bots, where he was already talking about bots publicly before.
You have a Business Week column out recently. Twitter's woes come from Jack Dorsey being too busy with Bitcoin. Very quickly, give me the overview of that.
So Dorsey, and this is one interesting thing that came out in these texts. You see Dorsey, who had just resigned from from Twitter, probably to spend more time with his Bitcoin, talking to Musk and saying, we really need to change things. We need to shake this up. Maybe it should be a protocol. He's very much whispering in Musk's ear, encouraging him to pursue this deal, and encouraging the idea that there needs to be significant change, which is kind of strange because he was the CEO until very recently. And it kind of tells you, again, the gravity around Elon Musk, that Jack Dorsey thinks that this outsider can come in and do something that he, as a founder and CEO, could not do.
All right, so much more to learn. Bloomberg's Max Chafkin, thank you. Much more ahead. Stay with us. This is Bloomberg. Google continues to collect ad revenue from crisis pregnancy centers on abortion-related search terms, while failing to properly label them as organizations that do not provide abortions. Bloomberg Quick Take's Madison Mills paints the picture.
Is Google keeping its promises on abortion information?
After Roe v. Wade was overturned, the information that's displayed on Google products across maps, search, and ads became really crucial information.
Google announced that it would adjust its search engine so users could find verified abortion providers. But are Google's changes actually working in practice? Let's say we're in Lincoln, Nebraska, where it can be hard to get an abortion. If I search abortion help, the contextual labels provided by Google seem to work. You can see that the first search result clearly says does not provide abortions. In this case, the labels are working. All of these search results are for crisis pregnancy centers. That's a type of non-medical organization that aims to persuade women to not get abortions. These centers pay to appear in search results for women who are seeking abortion information. The problem is that this approach from Google doesn't seem to work in searches for adjacent terms. In September, when I searched for Planned Parenthood, for example, I found that Google provided no labels on any of the ads that came up in search. The top shown result was for Nebraska Parent Center, which is a known crisis pregnancy center, and there was no label. According to an investigation by Bloomberg and the Center for Countering Digital Hate, Google also failed to add these labels on other abortion-related search terms like pregnancy help, abortion pills, and NAF hotline.
What we're finding is that Google's tiny policy changes do actually have a big impact on whether people are able to find accurate information about abortions or if they're misled.
In a statement, Google said it has clear and long-standing policies that govern abortion-related ads on its platform, and it applies these rules to all advertisers. It added that the company is constantly reviewing and updating its policies as needed.
That was Bloomberg Quick Takes, Madison Mills. Another story we continue to watch, Altria has ended a deal that barred it from competing with Juul. That opens the door for the maker of Marlboro to buy an e-cigarette company or develop its own vaping products. In 2018, Altria announced a $12.8 billion investment in Juul. As of June 30th, that stake was worth $450 million. And just this hour, we got the headline that Intel's Mobileye has filed for an IPO. We knew that Intel had planned the spin-off, and according to sources, that would be at a lower valuation of $30 billion. Very interesting timing considering the markets and a lack of companies going public, the company seeking to list on the NASDAQ under the ticker MBLY. Coming up, we'll have an exclusive interview with General Motors President Mark Reuss about the company's new Silverado EV vehicle. This is Bloomberg. This is Bloomberg Technology. I'm Ed Ludlow in New York. Rising interest rates and repeated market volatility has created a funding void, leaving many cash-hungry startups scrambling for backup plans. So how long are the hard times going to last? Joining us for more insight is Kathy Gao, partner at Sapphire Ventures, whose investments include the likes of Fitbit and 23andMe. Kathy, it's good to catch up. I've been asking venture capitalists all week, where is your head at right now?
Well, Ed, as we know, the markets have been absolutely crazy, but I will also say there's a dynamic in the venture capital industry right now where VC firms are sitting on an unprecedented amount of dry powder, about $300 billion right now sitting on the sidelines waiting to be invested into private companies. But as we sit here on the last day of Q3 and look back at the quarter, deal activity is still well below that of last year. But in the past month or so, I am starting to see certain positive signals that indicate a pickup from the summer slowdown. So first of all, more and more companies are starting to raise growth stage rounds, and that's what I focus on, Series B all the way to pre-IPO.
Right.
Or they're at least more open to talking to investors about a potential funding round. Number two, blockbuster M&A. A few weeks ago, Adobe acquired the popular design platform Figma for $20 billion. And fun fact, it's actually the third largest acquisition of a subscription software company. The first one was Salesforce acquiring Slack for about $27 billion. And the second one was Microsoft acquiring LinkedIn for $26 billion. So the Adobe Figma deal is definitely up there in terms of large M&A. And lastly, the IPO market is slowly showing signs of revival. Earlier this year, Instacart did file to go public, but more recently, the corporate trip management company TripActions also filed. So all in all, the world is crazy, the markets are crazy, but as a venture capitalist, I am encouraged by some of these signals.
Let's talk a little bit in a moment about the kind of IPO winter that we've been seeing. As you look across the startup curve, what are the headwinds right now to both deal making and also, I guess, the temptation to proceed with an IPO?
Absolutely. Well, founders and CEOs continue to postpone fundraising. Number one, due to the very large amount of money that they raised last year, many companies raised mega rounds last year at very, very high valuations. So they have plenty of runway to continue to grow their business commensurate with the valuations they last raised. And at the same time, of course, there's global headwinds to a lot of businesses. Uncertainty has caused a lot of fear in the market, and companies as a result are cutting back on spend, including software spend.
Well, Kathy, I know you to be this kind of long-term optimist, right? You look at the global economy, you look long-term, and you see opportunity. So what is the opportunity down the line?
Ed, I'm still very long-term bullish on enterprise SaaS. I fundamentally believe that current macro challenges can actually be a catalyst for increased innovation and optimization at many companies and enterprises. Of course, buyers will continue to be very careful with spend because burn is very important, but they'll also be looking for the next and best, greatest solution, right? They're looking for the best solutions, and I think it might trigger a software upgrade buying cycle across many of the sectors that we cover. And I think it's also important really to take the long run view. Some of the best companies have started and were built and emerged from economic downturns, companies like Microsoft, Apple, and Adobe.
So Kathy, real quick, we were just looking at some of your portfolio companies. What is the advice to founders right now in terms of cash preservation or how they use cash? Is talent key in this environment?
Absolutely, Ed. The four main things I chat with my CEOs about every week is number one, cash, right? You got to make sure you have enough runway to hit the milestones you need if you need to raise a subsequent funding round. So CEOs are all keeping cash burn in mind. Number two is really customer retention, right? Make sure your current customers are happy by delivering a great product and a great service and really listening to your needs. This is not a time to be neglecting your current customers. And lastly, and this might be the most important of all, in my opinion, your employees, right? Continue to hire the best and develop the most talented people you can find.
All right, our thanks to Kathy Gao, partner, of course, at Sapphire Ventures. Now, General Motors is taking its next dive into electric vehicles. GM President Mark Reuss took my mate, Bloomberg's Matt Miller, on an exclusive first ride into the company's EV truck, the Silverado RST. Miller joined him from the GM headquarters in Detroit, Michigan.
What people need to do is get into it and see what an electric truck really can do. And this is a dedicated platform with Ultium. We're just bringing our cell plant online right now in Ohio, and the second one will be in Spring Hill. But the center of gravity is different. We've got this will be on sale here in the spring with our work truck, which is what you're probably in today. And so for under $40,000, and that's a heck of a deal. And we're going to start off with about 10,000 pounds of towing with it. We'll follow it up with 20,000 pounds, and it's just a very capable truck.
What's demand like right now? I mean, not just for the EV business, in general, the American consumer, what's demand like? Well,
we haven't seen a lot of demand fall off, even with some of the sort of the ups and downs of the economic situation that we're seeing in the United States. But the demand is there. I mean, we are selling every single thing that we make. And we're selling it deep into the pipeline. So our dealers have really done a good job of being able to show people what the truck or whatever the product is that they want, and then when it's built, and then when it's coming, and that'll just get better as the chip the chip piece of this begins to level off and be more consistent.
Are you seeing any signs of that light at the end of the tunnel in terms of chips?
I think so. I think we're seeing, fourth quarter here, a little bit of leveling off. It's nowhere near what the demand is. The demand is still going to outstrip what we can actually supply because the inventory levels are still extremely low. So it takes a while for us to get the inventory back.
But that means no incentives, obviously. In fact, people are paying more than MSRP in a lot of situations. How long can that last?
It won't last forever. There's no way that can last forever. But, again, until we begin to fill the pipeline again with some inventory, that's going to be the case, I think.
What about the electric pickup? Not the pickup truck. I mean the pickup in terms of consumers buying electric cars. I drove the Bolt out here, and it was surprisingly luxurious for a car that you basically get into for $35,000 after rebates.
Right, and it's even lower than that now. We dropped the price on it here a few months ago, and we're seeing. I think you'll see in our quarterly results that people are really interested in the Bolt as one of probably the lowest cost EV that you can get into in the market. And strategically that's great for us because our dealers begin to learn how to sell EVs into the dealer footprint with our customers, and then our customers are looking for the cars. So in their supply, we're matching that the best we can right now. So it's a very, very compelling vehicle, always has been, particularly with Super Cruise on the EUV, and we're seeing a lot of demand for that.
What about 2023? How does the business look to you as we see rising rates, as we hear concerns about a recession? How do you plan into that?
We plan into it with our cost structure. And so we, 4 or 5 years ago, we really went at our cost structure. And, we're in good shape, but we can always be better. And so we'll continually take unnecessary cost out of the business from an efficiency standpoint. And next year will be better than this year. And that's the way we're going to work it.
That was GM President Mark Royce with Bloomberg's Matt Miller earlier today. Coming up, Emily Chang sits down for an interview with Casey Hahn, founder and CEO of Hahn Ventures. How Hahn went from being a federal prosecutor to a crypto venture capitalist next. But first, what Hahn has to say about rising competition from China and the need for the US to act on comprehensive cryptocurrency legislation. This is Bloomberg.
It's the US government that needs to start taking stock of the fact that right now, Emily, in China, there's 250 million eCNY wallets. 250 million. We're still talking about whether there should be a government central bank digital currency. We're still studying that.
In the latest episode of Studio 1.0, former federal prosecutor turned crypto venture capitalist Katie Hahn shares her outlook on cryptocurrency markets. Hahn sits down with Bloomberg Technology's Emily Chang to discuss why she left storied venture capital firm Andreessen Horowitz to launch her own firm, Hahn Ventures, and just how hard it was to do so. Take a listen.
What I set out to do was to continue to invest in this ecosystem that I think is so broad. The decision was very purposeful, and the timing was very purposeful. We have an early stage fund that does seed stage, Series A, even Series B, and then we have what we call an acceleration fund, which is, it's not a growth fund, it's a crypto growth fund, and I think those are different things, but it's later stage. It might be crypto publics, certain kinds of public tokens were set up to hold tokens, to participate in the token ecosystem, or later stage companies. I mean, there are now many crypto unicorns. The space has become really competitive, even though you say, crypto's had its kind of ups and downs. The thing is, a lot of people in some of those last cycles have seen the kind of venture style returns that can be had in crypto. Mm-hmm. And so you've had a lot of new funds enter the space. And that's driven up competition.
So what differentiates Hahn Ventures then from all of these other crypto funds, or even the more traditional venture capitalists like Andreessen Horowitz or Sequoia that also have crypto funds now?
Well, I think a lot of traditional venture capital funds now have crypto funds. It used to just be like a regulatory designation. It was like, are you an RIA, which is Registered Investment Advisor? I would say for crypto founders today, it's not enough to just be an RIA, right? Frankly, I don't even know if a lot of them care. That's a regulatory designation. What crypto founders today want to know is, do you live and breathe crypto? Do you inhale the discords? Are you part of the community? Do you participate in governance? Are you going to be staking these kind of crypto verbs out there? And if you're not really in the space full time, I think it's very hard to run a successful crypto fund. We don't have a hedge fund component. So we're not sitting here buying and trading and selling. That's a hedge fund structure. And there are crypto hedge funds. We're not one. We're making 7 to 10 year bets.
Just how hard is it to launch a crypto fund from scratch?
You know, it's hard, but it's not impossible. We don't have a crystal ball. I don't know, I can't predict cycles, but I knew that we were in a cycle where you saw so much fervor and excitement around the space. And I already talked about what makes us different, but I think one thing also is we are a nimble strike force. We don't fish in the same pond. We have the crypto natives, we have efficient execution, we have operators, seasoned operators who really know how to stick the landing. And I think that's reflected in our culture. I would say the only thing that's changed in our strategy as a result of the market correction is really more of a focus on early stage, but we still have our late stage fund. And when we see valuations, which I think we'll still see correct, spoiler, I think we'll continue to see some corrections. And so we might deploy our later stage fund a little bit more slowly. It might not be on an even 50-50 cadence, and that's okay. Long term, our strategy hasn't changed. Long term, we're committed to the space.
How much do you think valuations are going to correct?
You know, it's just, I can't give you a one-size-fits-all answer because crypto is not a monolith. You have some crypto companies that really follow more of an enterprise SaaS business model. You have others that are layer one protocols. You have still others that are consumer-facing applications. And I think one of the things we're seeing right now is the infrastructure layer, and that's where we're spending a lot of our time, by the way. And we think more and more use cases will come about when the infrastructure layer is in place. So my own view is we are not rushing to deploy. We're certainly not getting caught up.
Do you get VC FOMO, and how do you avoid that?
You know, look, I think it's very easy to get into that mindset, right? It's because it's a competitive sport. It's a competitive space, and I think I'd be lying if I said that that doesn't influence anyone. What I do, and I think I do differently, is I try to take stock of that. Oh, that's the FOMO mentality kicking in. That's bad. Again, you don't want to overcorrect, though. What we look for is amazing founders. It doesn't matter if I think valuations will correct. If there are amazing founders, there's a huge TAM. We also look for, what's your regulatory plan? If you're launching a token, what's your plan to comply with the law? What's your plan for security, by the way? We've seen a lot of hacks in the space. We want to really dive in there and make sure that the founders have been thoughtful.
That was Horn Ventures founder and CEO Katie Horn with Bloomberg Technology's Emily Chang. You can check out more of that conversation tonight at 7:30 p.m. Eastern, 4:30 p.m. Pacific, here on Bloomberg Television. Coming up, one company focusing on hiring hourly workers gets $60 million for its Series B. I'll chat with the CEO of Workstream about the digitization of recruitment and state of the labor market. This is Bloomberg. Workstream, a texting-based hiring platform working with big brands like McDonald's and Marriott, just raised $60 million in fresh capital to help it expand to even more industries that are employing hourly workers. Let's get right to Workstream co-founder and CEO Desmond Lim. Desmond, how does Workstream work?
Yeah, so we are this texting-based hiring software that helps you to actually source, screen, and actually onboard hourly workers faster. In the world of trying to work with these hourly folks, they are much more on the phone, they are much less tech savvy. So we actually built a software that's really built for them to be able to help them be able to hire, onboard faster.
Talk to me about the kind of circumstances that the workers themselves who you hope to hire through your platform operate in. What kind of workers are these, and in which industries?
Yeah. I mean, we all work across a really broad span of this sectors. As of now, we all work with more than 4,000 customers, from Burger King Dairy Queen, Marriott, and more. And I would say that as of now, our main focus has been in this restaurants, but we have grew very quickly into retail, healthcare, auto, and much more. I would say that there's a very big difference in terms of folks who work in this hourly deskless world and those who work in tech office worker. I would say in this actually hourly world, people are not as tech savvy. There's very high turnover, very high churn. So there is a need to actually tailor software that is really built for them.
I think back to the August jobs data, there's tens of millions of people in this economy who are working part-time, but by choice. And of course, there are many people on the sidelines who are trying to find some part-time work. You must have a very interesting lens into the state of the jobs market. What can you tell me about what your customers and clients are looking for? Are they able to get the workers that they need?
Yeah, I would say that it is still very, very tough to actually find talent and to find people. Staffing is still the top challenge for many of these businesses, from restaurants, retail, hotels, and more. But I think that is the very first trend that we see. Second trend that we see, though, many of these businesses, they are much more open to actually embrace and to try it out software and tech. We have seen a very strong growth, almost like a 10x growth in terms of how business owners and really ops leaders are much more open to actually use software. So I think that's been very good. I think the very third trend that we see more is more and more folks are trying to focus on this actually hourly worker. I would say that in the past few years, there just hasn't been much focus on this hourly worker, which really powers the world, right? There's more than 2.7 billion deskless workers in the world. There's more than 80 million hourly workers in the US. It's a very big market, but there hasn't been enough good software and tech built for them. So I would say that there's more and more needs tailored towards them now.
So you've got $60 million in the bank. What do you need to do with that cash to expand your offering? What are you going to do to develop your tech?
Yeah, we are very thankful and very humbled to be able to raise this round. I think this is really, with this funding, it grows our Series B to actually overall $108 million. And we have three main goals for this. First is really want to expand from our main focus of this restaurant into new verticals, into retail, healthcare, warehouse, and more. As of now, beyond some of the brands that I shared, we all work with Marriott, UPS, and many, many more brands. So that's the very first goal, part of this funding. Second goal that we have is really, go ahead.
No, go ahead.
Yeah, I think the goal next we have is really to build new products. Our first product is hiring. Our second product is this onboarding, helping you to actually really help you to smooth this paperwork faster. So I would say the next goal is really to build new products. The final goal is really to lead into our company mission, which is really to serve this deskless hourly worker, to build better software and tech for them.
Give me very quickly, Desmond, we only have about 30 seconds, a sense of how many workers are using your platform.
Yeah, we have now more than 4,000 customers across more than 25,000 stores. We have now actually helped to automate more than 10 million hourly folks who have been through this software.
All right, Workstream co-founder and CEO Desmond Lim, thank you very much. A good lens on the labor market. That does it for this edition of Bloomberg Technology. Have a great weekend, and don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and of course, as always, on iHeartRadio. We made it, guys. The end of a tough week, the end of a tough month, the end of a tough quarter with volatility in financial markets, venture capitalists sitting on the sidelines for now, but we'll have a whole lot more next week from San Francisco and New York. This is Bloomberg.
No one covers the world like Bloomberg.
Russia will then absorb these territories. What is NATO's reaction?
Italy's Giorgia Meloni wins a clear majority, ushering in the nation's most right-wing government since World War II.
The Fed offers no sign that it is ready to stop tightening.
With unmatched reach and resources from more than 120 countries, The moment news breaks, 24 hours a day. Bloomberg, your global business authority.